But now we are moving to our next panel, which is Mobilizing Sustainable Finance in Emerging Markets. And without further ado, I will invite our moderator for the next session, which is Nirnita Talukdar, APAC Regional Lead. And with you, you can invite your panel.
Thanks so much, Lali. And can I invite firstly Alejandra Díaz, Chief Sustainability Officer at Banco, Davivienda and Seguros, Bolívar. I'll give a longer introduction in a while, but yeah. Johannes, Vice President and Executive Board Member at Bank of Beijing. Ralph Opara, Group Head of the Commercial Banking Division at Axis Bank. And Simon Bessant, Director and Global Head of Insurance at the Texel Group. So firstly, thank you so much to the panelists here today, and good afternoon to everyone here. And thank you for being a part of the UNEP FI Global Roundtable 2024. A very warm welcome to this important panel discussion on accelerating sustainable finance in emerging markets. As Lali introduced, I'm Nirnita Talukdar, and I work as a regional lead for Asia Pacific at UNEP FI. And I'm delighted to moderate this session where we'll explore the opportunities and challenges of financing the transition in a really complex and dynamic part of the world. And so emerging markets are critical to global sustainability. They contribute significantly to the global GDP, yet face disproportionate impacts when you're talking about climate vulnerability, biodiversity loss, social inequality. While they are key to achieving global climate goals, they are also looking at rising populations, the need for energy security, and balancing economic development with sustainable transitions. At UNEP FI, we are working with more than 500 financial institutions today, and this is globally, and we are working with them through two main frameworks, such as the Principles for Responsible Banking, the Principles for Sustainable Insurance, and we're also convening the Net Zero Alliances. Now, these are global frameworks, and we work on developing guidances, tools, etc., while taking the regional context into mind. In today's morning session, Eric Usher, the head of UNEP FI, highlighted all the positive developments actually that is taking place in the emerging countries, including specifically highlighting things that are happening in Asia Pacific. However, one of the biggest challenges that I also keep hearing from our more than 100 members in the region is, in the Asia Pacific region, is talking about mobilization of finance within the region. The World Bank estimates that emerging economies, excluding China, will require $574 billion in additional annual climate-related investments by 2030 to meet their climate goals. Yet these countries currently attract just 14% of the global climate finance flows. Adaptation finance poses an even greater challenge, with only 16% of finance flows targeting resilient efforts, most of which rely on public funding. As we know, opportunities are there, but there are still challenges, as mentioned earlier, and also with regard to access to capital, regulations, etc. That's why I'm particularly interested to talk about today's discussion. It's an opportunity to hear from our distinguished speakers representing diverse geographies and bringing unique perspective on the solutions and actions needed to address these barriers. It's also a big honor to moderate this session. Everyone here representing PRB or PSI members and are also leaders in driving sustainable finance. So without further ado, let me introduce the panel to you. Again, I'm taking the name as well as the titles, but Alejandra Díaz, Chief Sustainability Officer at Banco, Davivienda and Seguros, Bolívar. BDSB has been a UNEP FI member through the PRB, the Net Zero Banking Alliance, as well as the Principles for Sustainable Insurance. Alejandra serves on the UNEP FI Principles for Sustainable Insurance Board and the Global Steering Committee, bringing deep insights from Latin America. Johannes, Vice President and Executive Board Director at Bank of Beijing. Bank of Beijing is a PRB member institution. Johannes has extensive global experience and has been a valuable advisor to me on advancing sustainable finance in the APAC region. Ralph Opara, Group Head of the Commercial Banking Division at Axis Bank. Axis Bank is a founding member of the PRB. Ralph brings extensive expertise sitting on multiple financial boards within Nigeria and has been recognized as the CEO Employee of the Year for 2024. And Simon Bessant, Director and Global Head of Insurance at the Texel Group. Texel Group is a PSI signatory, and Simon brings the expertise in insurance solution and de-risking mechanism. With that, let's dive in. So my first question to you is to you, Alejandra, and it is, can you share how you have been working with your organization on sustainable finance, to mobilize sustainable finance in your country? And it'd be really great if you can also provide like concrete examples.
Okay, Nirnita, thank you so much, and thank you UNEP FI for having me, and to my colleagues in the panel. And well, just to begin, let me give you a little bit context about my country, because when talking about that context, it makes a little more sense to you when I will talking about examples. That's Banco Davivienda is a Colombian bank with presence in other countries in Central America. We have almost 25 million clients. But talking about my country, we are a country that has with our emissions are less than 0.5%, but the 60% of our emissions come from agriculture, from the land use and forestry. So, and 7 million people are under high risk for climate change, and we have almost 3 million small farmers. So almost a million employees work on the coal and the oil and gas sector, and 20% of our fiscal income come from those sectors. So when talking about just transition, so we are talking about how we can move forward to reduce our emissions, but mainly how can we improve the resilience of those millions of people that are highly exposed to climate risk, and how we can provide enough employees and solutions for those employments that probably will be lost. And another issue that it's important to highlight is that we are the second biodiverse country in the world. So it is also important how we can use nature as well as a solution to overcome not just the reduction of emissions, but also how to use nature in order to become and to make more resilient our population. So we recognize the key role that we play directing and addressing financing to sustainable initiatives. And this is why years ago we decided to set a goal that the 30% of our loan portfolio will become, at least the 30% of them should become a sustainable portfolio by 2030. And we also committed to become net zero by 2050. Currently, our loan portfolio is 14%, so we are in the middle of the race. And 63% of our loan portfolio is social financing, and the other 32% is a green financing. So recently we reaffirmed our commitment, our sustainable portfolio with our policy. We published our policy, which is, the word is the name of our policy, and you can see it it's public, is the word is our home. Let's make it more prosperous, more inclusive and green. And this policy not just include our expectations and our appetite on sustainability business, but also a new taxonomy. Our taxonomy, bank taxonomy, is aligned with our green taxonomy, the one there is in our country, the one that was launched by our superintendents years ago. But it is also aligned with the ICMA principle, the bonds, the social green bonds principles from ICMA, and also from the CBI guidelines and the IFC guidelines. That's one of the examples on how we are facing and promoting financial sustainable finance. The second one is from the funding perspective, and just for you to know that we are pioneers issuing thematic bonds in Colombia. So in 2017, we launched the first, and we issued the first green bond for $100 million. And we issue in partnership with the IFC, and we allocate more of those resources to mobilize sustainable construction. So more than 100 of sustainable constructions are now funding thanks to that bond that we issue. We also issue a social bond in the middle of the pandemic. In 2020, we issue a bond with the IDB, the gender-focused bond. It's the first one bond in the world with an achievement-based incentive. So we need to raise our loan portfolio, the women-owned SME portfolio up to 27% by 2026. So raising from 17 to 27. And finally, recently, during the COP16 in Cali, Colombia, we issue our third thematic bond, the biodiversity bond, which is the second issue in the world and the first in our local capital markets, in order to mobilize $50 million to funding biodiversity conservation, restoration, sustainable agriculture, sustainable water management, circular economy, and so on. So those are some of the examples that we can share about how we are committed in terms of mobilizing sustainable finance.
Thanks so much, Alejandra. That's great. Also, big congratulations on the biodiversity bond. Have been reading quite a bit on that. And maybe just one thing, that going back to the first line that you highlighted, I think this is very important in terms of how just transition kind of needs to become the central point of when we are talking about transitioning in the emerging economies. With that, Ralph, can I come to you with the same question, and
Okay, at Axis Bank, I mean, we believe the pivotal role that we have in terms of the need to mobilize sustainable finance to resolve the challenges both in Nigeria and in Africa. And as a leading financial institution, we take it as a philosophy, as a point of principle to ensure that we do this in order to solve the challenges that we've identified. As you rightly said, we're one of the founding signatories to the PRB, and then that has provided an adequate framework to ensure how we look at our portfolio and to understand how to apply those principles in raising finance. Of note is that working with Climate Bond Initiative, Financial Sector Deepening Africa, and FMDQ, we were able to create a green bond market development program in Nigeria. And what that is supposed to do is to create non-sovereign, to deepen the non-sovereign green bond market, where funding and investments can get into to support projects. And on the back of that, we were able to issue the first corporate green bond in Africa that is CBI certified. We raised $40 million, of which was fully subscribed, and the funding went into flood defense control, renewable energy, and mass transportation for Lagos State. So we know that in terms of raising funding, we can't do it alone, and then we have to try and deepen the market to attract investment and sustainable finance towards Nigeria. Also, based on that, we were also the first bank to customize, to deploy a customized sustainable toolkit in terms of looking at our portfolio, understanding the risks, and developing strategies to mitigate those risks. That is also something that through capacity building that we are also teaching our comparator institutions and banks on what to do in this regard. Now, looking at our portfolio, in order to improve sustainable development, you have to look at women-owned businesses. It's important to support women-owned businesses. However, there are barriers for them getting finance. So based on that, what we've done is that we have deployed over $1 billion to support about 4,500 women-owned businesses and SMEs in the country. We've also set a very ambitious plan for ourselves at the bank. One of the plans is to raise $1 billion through DFI and donor funding to support, and this is a 5-year plan, which we developed last year to support both women-owned businesses and MSMEs that lack access to sustainable finance for sustainable projects. In addition, we've also put a plan to reduce 30% of financed to reduce climate control risks within our portfolio, extend our loan portfolio by $3 billion towards sustainable projects, and ensure that we reach 1 million excluded households within Nigeria and Africa. So these extensive targets, it's something that we've done, and working with DFIs and partner institutions, so far this year, we've raised about $500 million towards that project. We've raised about we deployed about $200 or $300 million from our loan portfolio towards sustainable projects, and then we intend to do this. Remember, like I said, it's a 5-year project towards what we're doing. Again, we have what we call a W initiative, which is an entire community that is focused on women businesses and how to support them through capacity building, financial management, and of course, granting loans. Together with IFC, we've come up with a program called the Womenpreneur Pitchathon, where women businesses, basically like a dragon's den, where they pitch some of their business ideas, and based on whoever wins, they have an IFC certified mini MBA, and of course are giving grants to do that. So we've supported over 500 women businesses in such a strategy towards doing that. Again, looking at sustainable finance, you have to talk about technology. And in order to bring the unbanked or the back into the financial system, you need technology to do that. And we have, through our African FinTech Foundry, developed 2 products, what we call the Quick Box and a Swift Pay, where we can deploy through your mobile phone, deploy technology where you can open bank accounts and, of course, access digital consumer lending towards either energy efficiency projects or sustainable nature or agriculture, efficient use of agriculture for those low-income households. So these are some of the things that we do as a bank towards sustainability and mobilizing finance. Thank you.
Thanks, Ralph, and congratulations on all the work. I think 2 things that you've also really, it really strikes a chord, because access to finance, we talk a lot about the need for this in the regions, especially in emerging countries. And I think, again, this is a very, very important integral part. And sometimes when you're talking about sustainable finance, this doesn't really get reflected. The second thing is also on capacity building. I think there is a need for this across not just financial institutions, but with also businesses, with MSMEs, etc. And there is a need to focus on that. I would love to touch more questions to you on DFIs and how has that gone. But before that, Johan, over to you on that question.
Well, first of all, I want to stress that probably contrary to most of you in the room, I'm not an ESG specialist. I'm just a banker, and I'm running a large part of a big bank, and my main goal is to meet the quarterly targets quarterly after quarter. But having said that, I did found my purpose in ESG, because getting older, I really feel that our parents, they created this problem. My generation, we haven't done a lot about it, and I don't want to leave this whole burden upon my children. So I'm really focused, and I find my purpose is at least getting a start of resolving this issue, because we need to save the planet. So as such, as an executive director and a vice president of a large business, my target is how can I really implement sustainability, drive sustainability in a large bank with over 20,000 people, because that's not easy. Especially in China, banks are important. Banks are a very important instrument in the rollout of the China nationwide strategy. And we are very instrumental, probably more than anywhere else in the world, in financing the green transition in China, because there is not a lot of other sources of funding. So what has Bank of Beijing done to drive sustainability? Well, first of all, we are leading from the top. And in the board, I'm driving this awareness, because if it doesn't start at the top, in China, nothing happens below. So we are Bank of Beijing, we are one of the systematically important banks in China. So we also feel as a board that we have the responsibility to be a leading bank on ESG in China. Not only because regulation tells us, we feel we are a large bank, we should do this. So what we did, we changed the name of our strategy committee at board level to Strategy in ESG. Not just to add 3 letters to it, but to really give a signal inside the bank and outside the bank that ESG is a core part of our future strategy. So our investor relations team also communicates that message on a quarterly basis to the outside world and to our investors, and talks to our investors what they think about this, if they support us, and what we can do better, because we have some investors that are even better at ESG than we are. At board level, we just approved last month a 3-year ESG action plan, 2025, 2027. And now we brought it to the organization. It has 20 main targets to be executed by the organization. High-level targets, but the directions are clear. And some of them are qualitative, but that's okay, because in China, people are very good in executing strategy and direction. So I have no worry that this will happen in the organization. And as one last thing, what I want to mention as leading from the top is that a year or so, 2 years ago, I had a discussion with Eric Usher, and he says, sometimes I have trouble opening doors in China. And I said, okay, let us as Bank of Beijing help you with that. So we hosted at the beginning of this year, was it this year? An event. We opened the doors at Bank of Beijing. We invited a lot of Chinese banks to come over, spend the day, where Eric and his team, Nirnita was there, was explaining to non-PRB members who are interested in becoming one to hear the news. And actually, I think, Nirnita, with all respect, that was a successful meeting, because you got a lot of new members in China because of that. So this is how we lead from the top. But we also, as Bank of Beijing, we cooperate with Chinese institutions on green finance and sustainability. We work with the Beijing Green Stock Exchange. We work with them on green financial products and service innovation. We have enhanced our cooperation in Beijing with the Central University of Finance and Economics. We established with them a finance research center. And by doing that, we're trying together to build actively trying to build an ESG ecosystem in China. And we also established with them all the details around dual carbon goals. And I mean by that, first, when and how will you reach the top? And then 2, how you go to neutral on that. So by doing that together with the university, we're able to roll it out to other banks as well. And then 3, of course, we follow the national guidelines on sustainable financial innovation, because China is very much centrally driven. And I see a lot of momentum in China on building a strategy around sustainability. In October 23 already, this is a year and a half ago, more than a year ago, there was the Central Financial Work Conference at political level, which set the targets for the whole financial industry on technology finance, green finance, inclusive finance, pension finance, digital finance. And that is then all pushed down into companies, the financial sector, you name insurance. We also are working together with the Shanghai Stock Exchange, where our stock is listed. With them, you know, we follow directions on them for issues like with the Chinese characteristics. Two things are very important in the Chinese economy: the vitalization of the rural areas, because everyone is moving from rural to city. And then two is very important. We are really trying to revitalize the small and medium-sized companies, because they typically have more trouble getting loans from banks than the bigger companies. And then last, what I want to mention here is that we follow the guidelines for sustainability reporting of listed banks. We all follow that all in a very proactive way. So we're doing a lot as a bank to support the sustainability in China.
Thanks, Johan. Maybe one thing also to highlight out here, as of today, we are working with more than 28 banks from China, which are PRB members, making it the largest number of banks from one country globally. And actually, as I mentioned earlier, Johan has really supported in terms of also providing a lot of advice, so definitely going beyond being just a banker. I think what you've highlighted, again, two things that is regarding policy and disclosures, and we're definitely seeing a lot more of that across emerging countries. Need for board level or need for buy-in from the top becomes critical when we're talking about sustainable finance. And both you and Ralph highlighted on technology finance. I would love to deep dive if we have more time on that. But moving away from the bankers right now, and Simon, then to you. Insurers, of course, have a very specific role in this agenda. And we're actually seeing that the insurance sector is becoming a very critical institution when we're talking about sustainable finance. So what is the role of your organization, and how are you working to unlock the sustainable finance market?
Thank you very much, Nirnita. Yes, I'm the insurer or insurance broker on the panel of bankers. So what am I doing here? So the work that we do with our clients is about optimizing the credit risk that they're taking and transferring those risks into a better rated guarantor. So in the case of a transaction in the emerging markets, our clients, who are generally commercial or development finance banks, are taking a credit risk on a project or on a counterparty in the emerging markets, and they have certain risk tolerances, certain capital constraints, and they're using the insurance product, the non-payment insurance product, to credit substitute the risk of the borrower's default with the risk of a Lloyd's of London or a London or Bermudan market insurance company. So this is taking single B minus credit risk and optimizing it and transferring it into a AA minus credit risk. That allows a lower level of capital to be held against these transactions depending on the regulatory environment. It supports increased lending, increased credit limits, and from a DFI or multilateral development bank perspective, can create a mobilization effect, can help transition countries, obtain a movement from public sector borrowing to private sector borrowing. And in all of that, our role is to represent those banks, those financial institutions, and create products that suit their needs with the wider insurance market. We have approximately 60 insurers that we work with that can provide these tools. And it's one, doing the traditional role of an insurance broker, which is syndicating a risk, but really two, it's about developing a wider market for this and explaining why, and something we might come to later, why sustainable finance transactions often perform much better than transactions in just a commercial or you can't really say unsustainable, but focusing maybe on less sustainable underlying assets. By doing that and by proving that, we can increase the amount of insurance capacity available. We can optimize the pricing. We can drive more insurance protection that can be purchased to expand the lending pool. So one thing I wanted to show briefly, I don't know, Nirnita, if you've got my slide by any chance. Yeah, there we go. Ooh, and it looks pretty. So this was 2023, and I think one of the important pieces and reasons we've signed up to the PSI was the fact that the insurance product is by nature the insurance product we have is by nature very confidential. So you're not able often to talk about what you've done because it becomes a vicious circle whereby the insurers are concerned that the counterparty who's borrowed the money suddenly becomes aware that some of that loan portfolio might be insured, and therefore there's a moral hazard. So, the transparency that is required by the PSI, I think, is very important, and to talk more about what we do and how we do our business, but also about what our clients are doing. So for 2023, we looked at our portfolio that we have with our development finance institutions. These are MDBs, DFIs from around the world. Within that portfolio, we'd insured approximately 1.6 billion of credit protection during that year, which facilitated nearly 3.2 billion of financing. So just with Texel, who probably not many people in the room have heard of, the portfolio that we work with our clients has already in 1 year, through the insurance product, optimized a significant number of billion worth of financing aligned to the SDGs. So how can our market and our clients do more? I think that's the sort of the next question. What more can the insurance vehicles that are available now do to continue to scale up this lending? And we talk about a deal specifically. We work with the African Development Bank. They had a request from the sovereign in Egypt to help them support their financing needs in time of currency sort of liquidity concerns. The AFDB with the AIIB issued 2 partial credit guarantees, one per institution, which supported a renminbi or a panda bond that was issued by the Egyptian sovereign. And behind that, we sat behind the African Development Bank using credit insurance protection again from our market to allow them to scale up the size of the guarantee they could offer. So it's that ability to silently, often, mobilize more optimized credit ratings, optimized balance sheets, but in a fashion that can really support increased lending into emerging markets. And certainly the key is to do it aligned to the SDGs. So there were some stats. 2024 is nearly finished, so we can publish some more, and hopefully there will be a significant amount more in 2024, which can show that, I guess, this is a product that needs to and continues to serve for EM and increasing EM lending. And we can talk maybe about how it can also be used by non-bank financial institutions, such as the institutional investors, to transform what they have, which is an appetite for finding more sustainably aligned transactions, but none of them from a capital perspective can really operate in anything less than an investment grade environment. And our product can turn what is sub-investment grade into investment grade. So hence it can be quite useful for the institutional investor market as well. So, but we can come to that in Nirnita later. So we can take the very large purple slide off the board and move back to just our names.
Thank you so much, Simon. Yeah, beautiful slide. No, really, thank you so much for bringing in the different perspectives. And maybe, Simon, just also very quickly on, I think as you highlighted, the need for transparency, and that is something that with both BRB, PSI, we're really trying to focus more on, but also align it. And the second thing is also around bringing in the SDGs in the conversation. I know we're talking about it with different wordings, but it's really great to hear that. I think this was really interesting to just understand the different kind of sustainable finance products out there. How can you be ensuring that you're looking at sustainable finance while talking about the emerging markets? But that brings me to the second question in terms of challenges. So maybe what do you think are the barriers when you're talking about accelerating mobilization of sustainable finance in emerging markets? So Simon, maybe let's start with you now.
Well, me again. I do like to talk, so please cut me off. So the barriers. I mentioned institutional investors, and I think insurance companies, pension funds have many trillions available to them to invest. They have a regulatory barrier, often investing in anything less than investment grade assets. And the opportunity for our product is that it can transfer that risk. It can turn what is an investment, for example, in an East African country project finance, which may well be limited in rating by the sovereign ceiling of that country, into a AA- rated insurance protection, and potentially in certain structures even a note that can be held at an institutional investor level, where they can see what is in the UK a matching adjustment regulatory perspective, which can give them really attractive returns based on the credit rating of the insurance providers. So what we face there is you face a pool of money which has, you know, probably pretty much no debt, no kind of known depth, and is many trillions in size. You have an EM, trade finance and infrastructure gap that is very sizable, and there's a regulatory barrier in the middle. And I think our role as an insurance market, not Texel as a company, but more the whole insurance market, is to try and create products that allow the tools there to achieve regulatory compliance, but then increase the scale of infrastructure investment into EM markets. I think the other hurdle we face as a insurance market is the fact that, yes, in this case they've put many billions into EM exposures. How do they do next year? Many more billions, and the year after many more billions. When these loan portfolios are often 15, 20 years and they don't amortize very quickly, how can you continue to take on credit risk in a jurisdiction when you have already expanding portfolios that maybe are limited by credit, your own net risk, willingness to take more risk, and your reinsurer's willingness to take more risk? So in doing that, I think we need to better consider blended finance structures in the insurance world. You know, they're well used in the fund world, they're well used in the banking world, creating first and second loss protection that can mean that insurers can maybe provide their credit protection in a senior tranche to really scale up the capacity there, working with government parties, for example, some of the government agencies that can provide guarantees, so that they can use those guarantees maybe to optimize balance sheets to increase scale in the insurance product. So there's solutions to these risks or these hurdles, but they come with engagement and removing this kind of lack of removing the confidentiality slightly of our product and becoming much more transparent. And I think in doing that, everybody recognizes that insurers are only providing part of the credit protection, but that part is allowing more mobilization of financing and has no impact on whether a borrower pays or doesn't pay, or whether a project provides cash flow or doesn't provide cash flow. And so it's kind of getting the real willingness to engage in that fashion. So yeah, I'm quietly positively hopeful for the coming years, if that's something we're allowed to say.
Thanks, Simon. Maybe Johan, coming to you, can you highlight maybe one or two examples or barriers that you think is taking place, especially in the context of China?
Yeah, you said barriers, and I was thinking about that because I think China is moving pretty fast on this, and actually it's always easy to point out what others should be doing differently, but I think I see still more internal barriers we have to resolve within the bank than external barriers that stop us from doing sustainability finance. So let me first tell you the things that I think that we as Bank of Beijing can do better, and this probably applies to every bank in China and probably anywhere else. First of all, we need to continue to grow the green finance book. It's now 30 billion euros, which probably maybe sounds a lot to you, but it's still a small part of our total balance sheet. We grew it year on year 40%, so that's good. But there's an enormous room for growth. And how to do that? And I have discussions in the board constantly. It's all about target setting. If we include sustainable targets in the target setting, it will be done. If they're not in the target setting, it will be not done. So luckily we've made progress there, and we've moved from short-term targets only to also longer term targets. We have a better mix now, but that's key. Get it in the target setting. And then 2 is we need more specialized products in sustainable finance. Actually, in September, 2 months ago, we just launched, and that was a big thing, 4 new green financial loan products. The first one was on waste. They call it No Waste. That was all about solid waste and resource recycling. The second one was about water saving, a big thing, especially in the north of China, which is semi-desert. That was about not only financing the technology for water saving, but also the equipment for water saving. Then we have a so-called green-brown loan, which means that you can get a loan if you are both using it for, say, brown investments, but also for green investments. But then we separate which part of that loan is used for green things, and we get a discounted loan. You get a discounted loan there. And then we have the e-loans, which was a special product. That was for green SMEs, so small and medium-sized enterprises that we label as green. Next to that, we have an inclusive finance product. You call it UNEP Finance, online. And that online product is for micro businesses that need easier access to loans, because not everyone can go to a branch, especially not outside the cities. And that, for example, we now have 27,000 customers there, which is not a lot. It's just the beginning. Year-on-year growth 20%. So we launched those specific products and grow, and with that we build momentum in the market. Recently, I've started a discussion in the bank, and we're implementing what I call helping customers going green, because I've noticed that many customers we can offer loans, green loans to customers, and they get like a discount. But a lot of customers, especially the smaller ones, they really don't know how to move from brown to green. And I said, we should not only offer a cheaper loan, but we will help them in the transitioning process, right? And but that's easier said than done. The team likes that, the bank likes that. But that means we need to start not only developing sector specialists in the branches that know the industry that the customer is working in, but also have, say, sustainability experts that can tell you about best practices on sustainability and the transitioning in the sector. So this is just very new, but we're going to develop the knowledge and train the people on this process, helping customers transition from brown to green. I really think, and I've seen that in other examples, in banks and somewhere else in the world, I think if you really want to be a leader as a bank, a leader in sustainability and green finance, this is what you have to offer customers. Probably some don't need it. They know exactly what to do. Many will like your support. And probably there will be some customers that will come to you as a new customer because you offer a service that other banks don't. Another area is that we are boosting technology finance. China is in a major transitioning of moving from low-end manufacturing, polluting mostly, to a higher-end, high-technology industry that is less polluting. So it's 2 birds in one hit, because China's getting too expensive to produce low-end manufacturing good, and they know they are a big polluter, so they want to, by doing this, they go green and they push for a higher level of economy with more technology. The banks have a very important role, is that we're very instrumental in this process. We get hardcore targets in this process. And our own Bank of Beijing technology loan book is already 50 billion euros, and year on year we grew 33%. So that's really a big thing for us. But I want to add one more thing, Nirnita, because there is something that I think that we also could do better outside the bank, and I'm looking at you, Nirnita, because what we see as a bank, and probably every bank experiences that we see a tsunami of regulation coming to us. International, national, this regulator, that regulator, and they all come with regulation which is different or the same or more or less the same. And with it come, say, requirements for reporting. And I one time sat down with my team and I said, show me all the reports we have to produce on an annual basis. And you start comparing them, and for 90%, they're all the same. It all comes back to the same thing, the same information, same data, but it's all in a different format. So, and I discussed that with Nirnita and Eric and a lot of people in the UNPRB. I said, it's difficult for us as banks to handle this, up to the point that I think that maybe banks are a bit scary to become a member of UNPRB, because that means another reporting line and then in a different format. So I, in my humble opinion, I was suggesting that maybe there is a task, a role for the BRB team in China to start, coordinating with the regulators in China, and there's many, on creating more alignment, not only on the policies of sustainability, but also on the reporting, which will make the lives of us simple bankers hopefully easier in the future.
Thanks, Johan. And I'll ask Ralph to go next. But before that, just one quick response to this is that with at least the UNPRB, we have really listened to our members in terms of aligning the disclosures and have worked on looking at the progress statement of this. But thanks, Johan. Ralph, over to you.
Thank you. I'll just limit my answer to 3 identified barriers, especially in emerging markets. I think the first one is strengthening policy and regulatory frameworks, right? So within emerging markets, there's policy inconsistency, and this basically limits the scalability of sustainable finance, right? And limits investor confidence towards driving sustainable capital for solutions. So basically, it's to work with various governments, both at the federal and subnational levels, to ensure there's consistent policies, established green taxonomies that would basically encourage investors and pool sustainable funding towards our market. It's very important. 2023 World Bank reports highlight that only 10% of emerging markets have established green taxonomies, and like I said, it limits global investors from putting in money towards emerging markets and that. So that is a critical action that we need to look at. The next one, I would say, is enhancing capacity and knowledge sharing. So I think in that one, we need to call on, again, I know you wanted to speak to me about DFIs, and this is where DFIs have been very helpful, especially for us at Access Bank working. It's about enlightening us as to the global standards, the necessary frameworks where we can align our portfolio towards achieving UN SDGs and, of course, the Paris Agreement. We need a lot more institutions to adopt those principles and frameworks. And I think that there is need for capacity building being offered by DFIs in emerging markets. It's very critical. Again, that would enable me, a traditional banker like Johan, to be talking about ESG because it's embedded in our framework, in our performance metrics. So as you're looking for transactions and as you're looking for risk assets to create, part of your performance metrics is looking for sustainable projects and deploying sustainable funding towards creating sustainable solutions and renewable energies and waste to management type transactions. So that's very, very important. And finally, I will talk about improving data availability and transparency. So again, in emerging markets, a global reporting initiative report reveals that only 25% of emerging market entities provide comprehensive ESG reporting. So again, that limits global investments in emerging markets. So again, you need to talk about improving standards, creating transparency, and ensuring that the necessary carbon credits are captured within the reporting framework. I think those are the 3 critical barriers I'd like to talk about. Thank you.
Thanks, Ralph. Alejandra.
Well, I have a long list of things that are missing. I'm going to go through that list, and probably my colleagues already mentioned some of them. But at the end of the list, I just wanted to share an example of how are we, or how we are addressing those challenges within a specific ecosystems that we are leading. So, well, what we need is more collaboration, more public-private collaboration, and the blended finance, as you mentioned before. So we need to attract funding from different sources with different return and terms expectations. We need to de-risking tools in order to finance those long-term revenue projects, like, for example, the adaptation projects. So we need some concessional capital, we need more grants, we need guarantees from the government, and as Simon mentioned, we need some special line of businesses from development banks. We need incentives for our clients because we need lots of information from them and data to know the impact that we are achieving, and they need to be and to receive a reward for what they are doing in order to providing us with a lot of data. We need commercial capabilities, we need technical capabilities, we need also more open data, we need open data regulation that let us receive or collect the data from different sources in order to better analyze the projects. So that's the list could be long, but just let me give you a couple of or one example on how are we addressing this kind of problem. So, considering the important role of agricultural sector in my country, as I mentioned before, is the highest sector in terms of emissions, but it's also the most exposed to climate change. So, and considering the importance of the sector to accomplishing the NDCs, not just the mitigation, but also the adaptation, and taking into account that we are leading bank, not just in lending, but also in insurance farmers. So we set sustainable agri-ecosystems. We are working with corporate clients from the agricultural sector, from the food and beverage sector, not just to know their emissions accounting, but also to understand their decarbonization plans and how they are working with their value chains, with their suppliers, in order to work with them as an anchor companies to try to promote and mobilize good practices and sustainable practices in the value chain. So we are also providing some kind of special conditions, like rates, like special terms, to those small and medium farmers and farmers from all sizes that get certification, sustainable certified. So we provide the special conditions for certified producers of different size. We promote financing solutions for small farmers, taking into account and taking advantage of the commercial agreements that they have with anchor corporations. We also are using the development credit line the development credit lines from the development banks, and we are also using the guarantees that the government provide. But the other topic that is important for us is that in order to de-risk the funding that we are, or the financing that we are providing to the small and medium farmers, we are providing parametric insurance against drought and against excess of rainfall to those low-income and middle-income farmers. And we are using the subsidy that government is providing to those parametric insurance for the agricultural sector. So actually, last year we faced probably the severe drought that we have faced recently in our recent years, and we paid more than $1 million to almost 10,000 small farmers. So, and nowadays, our agricultural sector represent, and the sustainable agricultural sector represent the 20% of our total green portfolio. And also we are providing lending to 30,000 small farmers that have been financed in order to become more, to become greener. So that's a kind of ecosystem that combine not just the inclusion to make their transition inclusive, but also to make them greener. That's what we can share.
Thank you all, four of you. I think there were a lot of points that were also similar among all of the four the points that the four panelists highlighted. Maybe just, I will not try and summarize all of it, but maybe just a quick points that I've noted is obviously the need for mobilization of finance in the emerging countries comes out as extremely important. Need for having an enabling environment. So I think everyone kind of talked about the need for looking at policies. Absolutely hear you on the need for transparency, but also in many countries, we are seeing that suddenly there is a lot of disclosures that are being asked, and as Johan, you also highlighted on this. And so with that comes the need for alignment. Very, very critical is also talking about customers and client engagement and how can financial institutions facilitate that. Looking at MSMEs, looking at farmers, smallholder farmers in the different countries, and maybe also very quickly also highlighting on the need for capacity building, knowledge transfer. This cannot be emphasized more, and looking at incentives. I think super critical points. Maybe if I can also add one point from my side, is that, for example, in Asia Pacific, we have more than 5,000 new coal-fired power plants. And again, I think, Johan, you alluded to it when you talked about the green and brown sectors, but it's very critical that when we are talking about challenges or looking at financing in the region, the unique context of each of these countries needs to be understood. And so that, like, so for example, again, for Asia Pacific, the transition finance kind of becomes key when we are talking about mobilization of finance in the region, because the way the Asia Pacific is working is because there is a lot of emphasis on coal-fired power plants, there's a lot of emphasis on rising population. So those type of things really needs to be taken into consideration. I do have some more questions, but right now I won't get into that right now, but maybe just looking at the audience, if we want to, Sarah, look, very quickly, just checking, maybe you can take up one or two questions. Sorajit, go ahead.
Thank you. My question really follows from the point, Johan, you said about the quarter-to-quarter pressure. And I'm going back to my own days working in investor relations before I moved into sustainable finance. The investment horizon on an average of fund managers and capital market analysts in looking at emerging market stocks ranges from 1 quarter to 3 to 4 quarters maximum, that's it. And a lot of those fund managers are actually the Asian arms of the European fund managers. So it's a different language when they're sitting in Europe, it's a different language when they're sitting in Asia. Now, why I say this is because a lot of strategic changes at the bank, and banking stocks actually comprise a lion's share of the stock market capitalization in a lot of emerging markets. A lot of them require board level approval. And the boards are very paranoid if an equity brokerage report comes out, because the capital market analysts don't really understand sustainability and climate yet in most of these markets. So they tend to create downside risk on the valuation of those banking stocks, and that freaks out the boards of those banks because nobody wants a bad brokerage report to go out into the market. And hence, what happens is a lot of banks who are interested in doing stuff in sustainability often resist in order to save their stock price. This is actually a pretty big reality. How did your banks actually navigate this sort of a situation? And because I'm sure this would have happened, this situation would have been there in your countries as well. Thank you.
Yeah, I think what you say is right, but I think there's still this misunderstanding that a bank needs to choose between sustainable strategy or earn money. And I think they can go together. I really think they go together. Let's be very frank. A large part of the discounts I give to my clients, interest rate-wise, they come from the funding from the central bank, which gives me lower rates if I use it for green loans. So that's not like it's coming from my own pocket. And so it's almost like how smart are you in using the tools that the central bank gives you and the lower funding in your policy. Our experience with talking to investors is that as long as they have the feeling that it's not hurting your quarterly performance and your margins, they like what you do because they see you go with the flow, right? Because there's also something as a bank, especially in China, you want to go with the flow of where the government policies are going. Well, it's all green, it's all sustainability. So that doesn't have to be contradictory, in my opinion.
Okay, I realize we are really out of time, but maybe just to wrap up, 20 seconds or 10 seconds each, but one call to action. Simon, starting with you.
Just the continued transparency, I think, of the private sector insurance market in what they're doing to support sustainable finance in EM.
Right. Johan?
When you work for a bank, put it in your target setting.
Alejandra?
Innovative instruments, more blended finance and collaboration.
Emerging markets must prioritize ESG principles. I look around this room and I can't see a lot of African companies, and yet African economies, markets are heavily impacted by the adverse effects of climate change. So more participation from African companies and more ESG adoption. Thank you.
Perfect. Thank you so much for this great wrap-up, and thank you so much to all of you and to all the audience out here.